Welcome to Ecn Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar fell beneath 65 cents as it accelerated towards the downside close to the bottom side of the range, but as you've seen where this support holds around 64.30-60 area after the RBA held rates at 3.6% as widely expected. The central bank acknowledged inflation is still too high, with Q3 CPI beating forecasts at 1.3%. But Governor Michelle Bullock offered no clear guidance on future easing, saying policy is close to neutral and uncertainty remains. Meanwhile, at the same time, the US dollar extended its rally to a high of 100.05 as the broader markets scale back expectations for further cuts this year, maybe postponing December's, due to Fed Powell's comments recently that another cut is not a foregone conclusion due to the US government shutdown. Meanwhile, all eyes will be on Wednesday's ADP employment numbers and also the ISM Services PMI for clues on labour strength and service sector momentum. So as I mentioned for the Australian dollar, the support lies firmly around that area of 64.30-35 where it's good support. So no doubt I am anticipating that move again and expect to see a rebound or a correction back towards 66 cents and then reassess from there. Turning to the euro, well, since taking out this key level somewhere around 115.40-50 area, the weight has remained into the fifth consecutive session. With no major eurozone data on the docket, all eyes will be on the US dollar and see if the demand continues as it holds near a 3-month high. Turning to the technicals, well, we are extremely oversold and the ADX is holding to a negative bias, and therefore let's see if demand will come from 114.45-55, and if so, could see a move back towards this top side area, which is seen around 115.60 and reassess from there. Turning to dollar yen, we've got an engulfing candle, which could support the bear case further, but I would like to see a confirmation of this candle, and let's see if we can get a break first of 153.35, seen as minor, and then 152.90 to 153.10. But let's see if we can get confirmation from the break, that is a 152.90 to 153.10, to open the way down to the region of 152 and eventually 151.45-55 and reassess from there, as there may be further room towards this key area of 149.5. Looking at sterling, well, another weekday has come through and still weighing on the support area that could see a further slide towards 129.65. I am a little bit concerned on how overheated this ADX is and how low this RSI as it sits deep in oversold territory, that we could see a correction soon back to 131.60 and reassess from there. My concerns of gold has come back as the market recently rebounded off the key area seen at 3,888 to 3,900. Seems to be back in play after the top side failed to cut and close above 4,017. Given the fact of how the technicals have buckled and remain weak, I feel the bears will weigh on this market at least for another $30. And let's see if we can get a bounce off that recent lows around 3,888. And if so, look back towards that 4,000 area. And finishing off with oil, we can see the market is slightly reversed into the second day and weighs a little bit to the downside, with support coming in at 59.60. But I feel the market may again bounce off this area and go back and look to the area of 62.5 and reassess. Well, that's a wrap. Thank you for joining me, and as always, look out the intraday report and I hope you enjoy the great start to the day.